Hi everyone, and thanks for tuning into another episode of Budget Investing. So today we are going to go over some undervalued stocks currently to take a look at for June. There's always changes happening in the market, and hopefully we can capitalize on some of the news that's come out recently, and we're able to use that to our advantage to make some money and hopefully find some long-term holds that are at a decent price today. So the first company that I'm going to point out again today, I know it was in the last video, but not a lot's really changed for them since then. It's Manulife Financial Corporation. So this is an insurance company that is kind of undervalued in comparison to the rest of the market. So if you were to look at the S&P 500, the PE ratio that it's sitting at is around 44, whereas Manulife is sitting at 11.9. Now that's pretty low, honestly. So they haven't really priced in any of the potential news that they've had recently, and I know their financials that came out most recently didn't wow anyone, but they were still solid numbers. So there's still a lot of potential here with Manulife. Of course, it's gone up 66% in the last year, which is still pretty nice if you were to have bought in a year ago, but they're kind of right around the same price that they were at right before the COVID crash happened. So not a lot's really changed with them. So maybe they're a little bit more of a long-term hold. And one thing that I personally really like about them is that they are a dividend growing company. So they've been growing their dividend for 5 years now, and they're growing at a 10% pace every year. Their payout ratio is nice and low. Their dividend yield is in and around that medium to high range that I measure at. So it's not too high yet, but they're in a good position to continue to grow their dividend year after year and to continue making you more money. So it seems like it's a great company to buy. There's a lot of potential here to make some money off of it, so it's just worth checking into, but of course, do your own due diligence. Now, I have one more company here for you in the financial sector, and this one is JP Morgan Chase and Company. It's similar situation to Manulife, where it's a bit undervalued in comparison to the PE. It's only around 12.5 right now. But of course, that might change with any further pricing in action. Of course, it's not that cheap of a company as a whole. It's $164, whereas Manulife was only about $20. So it's definitely more costly to get into, and it is at all-time highs right now. But they're still pricing it in and saying that, hey, this is an undervalued company. If you look at the first analysis down here, they're saying this is a permanent hold for your portfolio. So there's a lot of potential here as a company. Again, make sure you check it out yourself. But I know looking at the dividend scorecard, I see a lot of potential here. Their dividend yield is around 2%, so it's still quite low at this point. Their payout ratio, same thing, only 27%. So they still have a lot of money that they're using to work with. They're growing it at a 15% rate. So that's actually pretty high, which is a lot higher than the banks that I personally have been holding. This is definitely being considered to add to my portfolio and maybe subtract somewhere else. And they've been growing it for 8 years. So it's definitely on track to be sitting in that dividend aristocrats category. So if they can keep it going for 2 more years, they'll have kind of made it through every up and down of the market for the last little while. And they've definitely shown that they can sustain and hold. The third company that I want to go over with you today is Enbridge. And I know what you're thinking. This is an oil and gas company. This is somebody who seems to be in a dying area as we kind of transition over to renewables and different forms of power, and just we're really making the transition away from oil and gas. But you need to remember, Enbridge is a energy producing company at heart, and they are making investments to increase their ability to create power from renewables. So I wouldn't count them out quite yet, especially if they're able to make that transition over the next few years. They could become a dominant player in the market as they have the money to get into it right now while things are still growing. But there is a lot of hesitancy within Enbridge right now with, of course, the pipelines being canceled and all of the hurdles that oil and gas has been having to run through lately. So there's still a lot of hesitancy out there. But I think this is a time to capitalize on that negative news so that you can get in low, maybe ride the wave back up as people kind of realize that, hey, their financials are still really strong. This is still a really good company. And in the short term, at least you're still getting a very strong dividend. I know their payout ratio is extremely high, but they do have a lot of cash flow coming in every quarter. And on here it shows their dividend growth has been for 3 years. That's not the case. They were looking at a longer, about a 25-year pace, and they grow it every year in around that 10 to 20% range. They're sitting at a 5-year average of 11%, and $2 every year for every single share is pretty great. Just keep a close eye on Enbridge if you were to buy into it, because that dividend yield is high, that payout ratio is high, and it may become a potential problem for them, and they may cut it. But it is a source of pride for Enbridge. They're really proud of their dividends, so they're probably going to do everything in their power to continue to either maintain it or at least increase it. Now, Kroger is the next company I want to talk about, and it's actually a company that I've recently initiated a position in. I feel really confident in them, especially while their PE is around 13, and they seem to be in a position where they're really going to start capitalizing on the changing world and the supermarket industry. I wasn't exposed to anything in the supermarket industry unless you were to count Costco previously, but Kroger really seems to be a company that's positioned well at this time. They're decently valued, at $36, $37 a share. They're not too expensive. I can buy them quite regularly with my current payments that I have going into my accounts. And they're a really strong dividend payer, which gives me a lot of confidence that they are a company that's positioned well for the long term. Their payout ratio is very low. It's 25%. That gives them a lot of money to work with. Their annual payout is under $1, so that's fine. I understand. I'm not buying this as a company to expect a lot of money coming in today. I'm purchasing them with the mindset that the dividend is going to continue to grow like it has been for the last 15 years at a pace that's higher than the S&P 500's growth. So if they can continue to grow at an 11% pace, that's more money coming in my pocket year after year. They have a pretty large hold of the market, and they're everywhere. So everyone's probably heard of a company that is run by Kroger. They might not go by the specific name, but they are owned by Kroger. So just take a look into it. I feel they're a strong company. They're not quite at 52-week highs, which is nice. So they are in a position to potentially be a really good purchase today. The last company I want to go over for you today is AQN. Now, I know this was a company that was in the last list that I did, but they're still kind of in the same position that they were before. That PE ratio is still in around that 12.5 range, so it's not very high. And they haven't really been recovering. They're just kind of sitting flat over the last year or so, which is fine. They haven't gone up a lot, but they did make one really big run up previously this year, and it was pretty nice. They went up 31%, but they've run into some hiccups lately with the storm that went through Texas, which was this drop that you see right here. And they've just been getting bad news after bad news. But I know in the long term, this is a company that you're going to see to continue to grow. This 17% dip that you're currently looking at, it's not going to last. They will outlast that, and they're going to continue to go back up. In the last 5 years, they've gone up 58%. They're still reasonably priced at $18.50 right now. So there's just a lot to really like about AQN currently. And they're a renewable energy company, so there's a lot of potential here as the world kind of makes that shift. And the last thing that I do really like about them is their dividend. So they've been growing it for 11 years at a 10% pace. Yes, again, that payout ratio is really high, but you need to remember, as an energy company, they have a lot of money coming in every single year. They have a lot of overhead to generate that energy that we use in our homes, but their payout ratio is in a sustainable place that they still have more money to continue to grow the company. Their annual payout, again, it's very low. It's under $1. I don't hold this company for the income today. I'm holding it for the future income, as their dividend yield is still at a decent place, especially as the price of this company continues to go back up. That dividend yield is going to go back down into a reasonable area. Hopefully you enjoyed today's video and it gave you some companies to take a look at in the short term to hopefully find someone to either add to in a position or to initiate a new position in your portfolio. We always want to be hunting and always kind of just checking in to see what's going on. We just want to make sure that we're using our money to the best use that we can. The whole purpose of this is to continue to grow it. So if we're finding undervalued companies, if we can sell out of overvalued and move that money over there and ride the wave back up, we'll be continuing to generate more and more money so that we can hopefully retire earlier and with more money in the bank. But if you did enjoy today's video, please do subscribe, as it does help me continue to grow this channel. But thanks so much for watching, and I will see you in the next video.